Washington, D.C., Eamon Javers has this latest. Eamon.
Melissa, CNBC has obtained a clip exclusively of an interview with former White House advisor Steve Bannon. The interview is conducted by Sean Spicer, who's, of course, the former press secretary for Donald Trump in his first term. In this interview, Bannon makes a provocative suggestion about the future of Scott Bessent, who's the Treasury secretary, and whether or not he should have a role at the Fed. Here's what he says.
I am a big believer that on an interim basis, that Scott Bessent should be both the head of the Federal Reserve and the Secretary of Treasury, and maybe get through the midterm elections, step down as Treasury, and take over the Federal Reserve.
Now, that full interview is going to air at 6 p.m. on Sean Spicer's podcast on YouTube. But in that, you see Spicer discussing this with Bannon. We should note, of course, neither one of those men is a current White House official. Both of them retain significant relationships here inside the building. And so this idea that Scott Bessent should be both the Treasury Secretary and the chairman of the Federal Reserve after Jay Powell is clearly an idea that's going to get some traction inside this building. Whether it will be embraced by this building is a different question entirely. We'll ask White House officials what they think of that idea. Scott Bessent himself has said he does not want to be Fed chair. He's happy in the job that he's in. The president said in August that he was taking Bessent off the list of candidates for the Fed because Bessent told him he wants to stay at Treasury. So this idea, though, that he could have a dual hat obviously will raise a lot of concerns among people who are very focused on the idea of Fed independence. The idea that you could have a Treasury secretary simultaneously running the Fed will be controversial in those circles, guys. The whole interview, as I say, on 6 p.m. tonight on YouTube. But that is the gist of the comments there from Bannon, who says he likes the idea that Bessent can both explain Trump economic language to capital markets, and he's got a steady pair of hands in terms of understanding what Trump wants. So that's the comment. We'll see what people make of it.
Well, the capital markets probably wouldn't like this move, but Eamon, stay with us. Let's bring in senior economics reporter Steve Leisman to discuss this. This have been floated out there before, Steve, and it seems like they're swatting it away. But here it is once again. I would imagine you'd have to go pretty far back in the history books to actually find an example of this in the past, if there is one.
I think there was in 1913. I'm just doing my search here for a little bit, but in 1935 is when the Fed, they really wanted this independence in place. In 1951, there was the accord between Treasury and the Fed, really asserting the Fed's independence. It's something Congress has wanted. And I guess literally the Treasury Secretary, being both the Treasury Secretary and the Fed chair, would effectively end that independence. And I guess I have a couple questions beyond which whether or not and how much Bannon matters in this White House. I guess if the president hears it and likes the idea, he might suggest that. But the first one is the extent to which a proposal like this is specific to the people, or is it something that they want to happen sort of broadly, that the Treasury Secretary and the Fed chair should be independent? He said on an interim basis, but why? I mean, why on an interim basis? Why not permanently if you're going to do that? The trouble here, and Melissa, you kind of got at it, which is that I don't think capital markets would like this to the extent that essentially what you'd have is the guy who's selling you the bonds would determine afterward, or could determine afterwards, what the price is of the bonds you just bought. So that would be a big problem, and it would really seriously undermine both Fed independence and, most importantly, the biggest and most liquid markets in the world, the U.S. bond market.
Yeah, I mean, at the risk of, maybe trying to project a little bit too much strategic meaning to the message, Steve, it may, the interim basis and this comment of maybe step down after the midterms, to me, it rhymes with this general sense of the administration wants to find all these levers to run the economy really hot into next year. So rates lower, you're going to get the fiscal push. They think they're going to get a lot out of corporate spending off of the tax bill and all the rest of it. Also, a really active tax refund season apparently is on the way in the first quarter.
And the proposal is on an interim basis through the midterms.
That's what
specifically,
he said. Yeah.
Right? Yeah. So that is exactly to Mike's point here.
Yeah, Melissa.
So I think Mike just nailed it.
I'm sorry. Go ahead, Steve.
Go ahead, Eamon.
Well, the idea of putting a peg on it through the midterms obviously puts a political spin on it. But the Overton window on this is moving, right? I mean, the idea would have been controversial, a year ago to have somebody on the Fed who simultaneously is holding a temporary job at the White House and coming back to the White House after that. But we have Stephen Myron now sitting on the Fed and intending to come back to the White House after that job is done. So markets didn't really react to that question of whether that is an independent relationship or not. And so the question is, how far has the Overton window shifted on this, the window of what's considered acceptable? And do markets like this idea? It's clearly an idea that's in the conversation. Now that you have Bannon and Sean Spicer talking about it, it's in the conversation in the MAGA base. Is it in the conversation in the White House? As soon as we get done here, I'm going to go inside the White House and ask. Doesn't it need to be a conversation in Congress as well, Eamon? I mean, isn't there a congressional aspect to this where the administration can't just make this happen? Sure. Yeah. I mean, they'd have to get approval, right? And the Senate would have to agree that that's a good idea. Are there Republican senators between now and the midterms who would say, you know what, we really like what Scott Bessent is doing. We don't care about this idea of Fed independence so much. What we want is somebody who can translate, Trump's broad economic desires into specific concrete economic policy. And so we'll overlook all that. You'd have to talk to a Senate watcher to know if the votes are there for that now. That would have been considered an enormous, almost impossible leap, like I say, a year ago, 6 months ago. But, as I say, the Overton window is shifting. And so we'll have to take everybody's temperature and see what they say. All right. Thanks, guys.
So the question real quickly, guys, is whether or not the Overton window includes violating the Federal Reserve Act, which mandates that members of the board shall devote their full time to being on the board. So that's a little unclear.